Donald Trump is showing no signs of backing down in his trade war, and Wall Street is getting the jitters. S&P 500 is in correction territory, and the prediction market says there's now a 40% chance of a recession in 2025. To be or not to be? Will Trump climb down, or is he boxed in? Will the stock rout be soon over, or are we still in the early innings? What should you be doing with your money right now? Regardless how you might feel about Trump's trade war, Trump is right about one thing. In the trade war, the country with a trade deficit will do better than the country with a trade surplus. To see this, imagine an extreme case of a trade war in which trade becomes so unattractive that countries stop trading altogether. For the trade deficit country, this implies a greater reduction in imports than exports. All else being equal, this should add to its GDP growth, to the extent that the gains from import substitution will outweigh the loss of exports. In contrast, for the trade surplus country, the end of trade implies a greater reduction in exports than imports. All else equal, this will subtract from its GDP growth. In the long run, a trade war is likely a lose-lose for all. However, in the short term, the trade deficit country will fare better than the trade surplus country. The US is running a trade deficit close to $1 trillion right now. This is why Trump might think that he holds the Trump card in the trade war. But is he right? America's average tariff is considerably lower than the average tariff of many of its trading partners. Trump is right to think that this penalizes US workers. The US is the largest export market for many of its trading partners. Trump sees high tariffs as a way to force foreign companies to produce in the US what they sell in the US. For Trump, tariffs are both a source of job creation and a solution to the trade imbalance between the US and the rest of the world. A weaker dollar will of course have the same effects as tariffs, but the dollar will have to go down a lot to achieve the same economic impact of a 25% tariff. Such a large depreciation of the US dollar is not that easy to pull off. Furthermore, it could jeopardize the dollar's reserve currency status and push up the borrowing cost of the US government. It is understandable why Trump might prefer tariffs to a weaker dollar. But does he have the stomach for a long drawn-out trade war? Trump knows that a prolonged trade war could push the US economy into a recession and cost him the Republican majority in the midterm elections next year. For his gamble to pay off, Trump needs to force America's trading partners to capitulate quickly. This is presumably the rationale for his maximum pressure campaign. But there are no signs that this strategy is working. Meanwhile, the US stock market is in a freefall. Scott Bessent, Trump's Treasury Secretary, said this week that he's focused on Main Street and not on Wall Street. But the reality is that the stock market is more important for the US economy than for other economies. For one thing, a third of US household wealth is invested in stocks, much higher than other countries. Does Trump really have the Trump card? How long can Trump hold out? In a way, it is puzzling why Trump chose this particular moment to embark on his trade war. Despite a strong dollar, the US trade deficit at 3% of GDP is now far from the average of the past decade. American manufacturing took a hit during the lockdowns, but it has since made a full recovery. The relative wages between manufacturing and non-manufacturing jobs are back to their 2018 levels. The relative performance of the US economy has not been stronger since the late 1990s. The US has done so well that Germany is barely richer than Mississippi, the poorest state in the Union. And Canada is poorer than Alabama, the third poorest state in the US. Meanwhile, China's share of U.S. imports has collapsed since Trump's first trade war. U.S. trade deficit with China as a share of total U.S. trade deficit has fallen to a 20-year low. And even with millions of illegals pouring into the U.S. over the past 3 years, the U.S. unemployment rate is just at 4%. This means even if foreign companies wanted to make more stuff in the U.S., they would struggle to find workers to do the jobs right now. You don't have to be an economist to see that at this moment in time, the upside for the U.S. from the trade war is lower than the downside. Is there a rational explanation for Trump's trade war? An explanation that can help us anticipate how it might end. Sequencing is a crucial consideration in chess. A perfect example is the famous Opera game by Paul Morphy from 1858. The game is known for rapid development and sequencing, including a brilliant queen sacrifice that forced a checkmate within 3 moves. Trump has been on the attack since the inauguration, but I'm struggling to see an internal logic to his line of attack. For example, why hasn't he closed a deal with Mexico already? Claudia Sheinbaum, the president of Mexico, has gone further than the leader of any other country to meet Trump halfway. Rewarding Mexico for the concessions it has made should help encourage others to do the same. Also, did Trump really think that sending his vice president to Europe to humiliate the Europeans will help get them to bend to his will on trade? J.D. Vance should give his Munich speech after the Europeans have cut a trade deal with Trump and not before. Maybe there's more in Trump's game than meets the eye, but my gut says what we're seeing is the result of Trump being out-Trumped by the MAGA zealots and cycle funds that Trump has surrounded himself with. I think he's been egged on by some of these people who just don't see the bigger strategic picture. I predicted in my video last week that Howard Lutnick will be the first Trump cabinet member to get fired. I stand by this prediction. I would even wager that on the day Lutnick gets fired, S&P 500 will rally 3%. Now some predictions. Trump will back down. The only question is when. I find it difficult to believe that it will be before April 2nd, when these reciprocal tariffs go into effect. The reciprocal tariffs are the best idea in Trump's trade war arsenal. I can't imagine Trump will give it up. Between now and April 2nd, we also have the March 23rd deadline when the European Commission will issue its ruling on non-compliance to the Digital Markets Acts by Apple, Google, and Facebook, with the Commission very likely to levy big fines on these companies. Trump might think his trade war is his only leverage. S&P 500 has fallen 10% from the top. Over the past 90 years, S&P 500 has had a 10% correction on average once a year. A 15% correction happens on average once every 2 years. And a 20% plus correction happens on average once every 3 years. The economic implications of a bear market are so dire that I would be very surprised if Trump is prepared to allow it to go that far. But another 5% downside in stocks seems inevitable. The whole world is waiting for Trump to fold. My advice is to fire Lutnick and give Mexico a deal. This won't help Trump win the trade war, but they will at least buy him some time with the stock market. Thank you for listening.